Testing. Hello, hello. Testing, testing, testing. Testing, testing, testing. Are we live? I think we're live. The Las Vegas housing market has officially now entered a correction. Values are starting to drop on a year-over-year basis in many different areas of Las Vegas, and now the inventory on the market is near the highest level in the last 10 years. All of this is actually great news if you're a potential home buyer or investor in Vegas. Finally, cheaper prices are on the way. The question is, just how much are these values going to drop over the next year? And to answer that question, let's look at some data on Reventure App so you guys can understand what's going on in the Vegas housing market right now. Currently, there's 10,000 homes for sale in the Las Vegas metro, which covers Clark County, Nevada. Now, you could see this is up about 40% from last year on inventory, and it's the second highest level of inventory in the last decade. So these higher inventory levels in Vegas are now causing a flurry of news articles talking about how Las Vegas's housing market is cooling the fastest in the US, how Las Vegas leads the nation in a glut of homes for sale. And we're also seeing articles about how Las Vegas tourism decline is continuing. So Vegas seems to be getting hit at the same time by a housing slowdown and an economic slowdown. And the important thing to understand if you're a home buyer in Vegas is that this is not Vegas's first rodeo of going through a housing market downturn. Only 15 to 20 years ago, home prices in Vegas went down 60% in the last crash. This is one of the most volatile housing markets in the US. So now that we're seeing the early signs of a slowdown, it could be a signal that we could be entering an extended period where prices start dropping. The question is, how much are they going to drop? Are they going to drop everywhere in Vegas? Are they going to drop in Henderson and Summerlin? I'll get into all of that in this video. But first, I want to talk about why this inventory is going up. Why is supply increasing, and why is it unlikely that we're going to see an immediate recovery in Vegas's housing market? And it all has to do with home sales and buyer demand. You could see here the buyer demand in Vegas is down almost 45% from the pandemic peak 4 years ago. In August 2025, there was 2,300 home sales in the Las Vegas metro, according to data from Redfin, available on Reventure App. The long-term average is 3,400 home sales. So we are down 33% on sales activity. It's the lowest demand in 13 years. And so if you're a potential buyer in Vegas and you're frustrated about the market, understand that the demand is the lowest it's been to buy in 13 years. Why? Well, the prices are still really high. The prices are still through the roof. People can't afford it, and the demand is really low. And so long as this demand stays low, we're going to continue to see more inventory. And why is this demand low? What is going on? Let's take a look at some listings. How much are houses going for in Las Vegas right now? What are people listing at? This is kind of a typical house you might see in Vegas. It's a 3-bed, 3-bath. Looks like your prototypical Vegas home. You got the dryscape in the front yard. You got the big heavy tiles in the kitchen to keep things cool. Well, if we take a look here, it's $365,000 for this house. Now, you guys can let me know, do you think that price is worth it? It's around $245 a foot. There's a $32 a month HOA. But where I want to actually bring you folks here is down into the listing history. Listing history. This house was listed for sale in July at $370. They cut it to $365. But take a look at this, everyone. In April, it was listed for rent at $1,750 a month. So it was a rental at $1,750. Then they took it off the market for rent and are now trying to sell it at $365,000. And this is a great example of the problem that exists in Vegas's market right now. Why is the demand so low? Well, to buy this house with a mortgage, you're talking a payment of $2,400 a month. Let's just zoom in on this, everyone, so you can all see it. To buy it with a mortgage, we're talking a payment of $2,400 a month, according to Zillow, to buy with a mortgage. But they just had it on the market for rent at $1,750. So the cost to buy this house is what? About 35%, 40% more expensive than the cost to rent. And when you enter that situation, you enter a situation where there isn't a lot of incentive for first-time home buyers to get into the market because it's actually financially cheaper on a month-over-month basis to rent. And that's very much the situation we're seeing in Vegas right now. That buy versus rent differential is huge. It's through the roof. And so long as the buy versus rent differential is through the roof, we're going to see that low demand. We're going to see the inventory pile up, and we're going to start to see prices drop. However, one thing you guys all have to understand is that values are still really high in Vegas. They've only come down a little bit over the last 3 years. We're still at a very, very high level. I'm not saying that, there's been a crash already. Quite to the contrary, you could see values in Vegas, according to data on Reventure App, are flat year over year. Values are flat year over year. So really no change in values the last year. What we're starting to see though is month over month values are dropping. So in August, values in Vegas dropped 0.4% on the month, which annualizes to 5% in a year. So we're starting to see these values drop month over month in Vegas. And if we go and look at different zip codes, woo, you can see we got some declines pretty much everywhere now across the map here, a sea of blue. So values are starting to drop everywhere, month over month, year over year. They're down towards North Las Vegas, Twin Lakes, Paradise. They're down year over year. They're still up year over year in Summerlin, but we'll see for how long. They're still up year over year in Boulder City. We'll see for how long. But most of this market, we are now actually forecasting a decline in the next 12 months here in Vegas's housing market, which is great news, folks. If you're a potential buyer, this slowdown is great news. And a lot of people in real estate will try to pretend and try to almost convince you that this is bad news. A lot of people will try to say, no, 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 this is bad news, or it's fear, or it's scary. No, 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 this is great news. If you've been waiting to buy in Vegas because you have a lot of homes for sale, you don't have much competition, and the prices are starting to drop. For those of you who've been waiting to buy over the last 3 to 4 years, now is your time. Now is your time where it's really shifting to a buyer's market. But I think a central question is, when do you jump in? When is the right time to buy in Vegas, and how much will these values drop? And let's get into some of those questions because I think you guys deserve to know the answer. I'm going live right now here, and we got some people live from Clark County in Vegas in the chat. Michael, Pavel, good to see you guys. If you have any requests for zip codes, feel free to leave those. I'll try to get those by the end of the video. But we have a -3% forecast the next 12 months for Vegas overall. That forecast varies significantly by zip code, but -3% for the next 12 months overall. I wouldn't be surprised if that forecast gets revised down in future months given the trend in the market. But let's just do a little history lesson here. Like how overvalued are prices in Las Vegas right now? Well, you could see that they are pretty overvalued. Reventure App has values in Vegas tabbed as 17.2% overvalued compared to their long-term norm. So they were 42% overvalued back in 2022. Now they're 17% overvalued. So 17% downside just to get to like a fairly valued level. But take a look at what happened back in 2008, 2009, 2010, 2011, 2012. Vegas's market became very undervalued during the last crash. It's actually amazing how much Vegas's market declined in the last downturn. Home values in Vegas went from 338,000 in 2006 to 127,000 in 2012. Values literally went down by 60%. Then, interestingly, by 2020, they still weren't back to their 06 high. Then in 2021, they exceeded their 06 high, and then they boomed in 2022. Corrected a bit in 2023, and then have been flat really for the last year or so. Lucas has a question here in the chat. He's asking, the last crash, it took 5 years to bottom. How long did Vegas take? So in the last crash, it took 5 years to bottom. Well, Vegas peaked in 06 in the last bubble. It bottomed really in 2011. So it was a 5-year downturn. I would say the one thing that's definitely different about this cycle, though, everyone, is the economy. So, if we take a look here at the unemployment rate in Las Vegas, one really important bit of context, right, is what happened. And funny, the pandemic almost kind of really skews this. It's almost like ruins looking at the chart. Because during the pandemic, the unemployment rate in Vegas went to 34% for like 2 months. But back in the last downturn, the unemployment rate in Vegas reached 14% by 2010. Lots of unemployment. Imagine 14% unemployment. 1 out of 6 or 1 out of 7 people didn't have a job. And it was around a 4% unemployment rate, went to a 13% unemployment rate. Today in Vegas, we're at a 6% unemployment rate. So the unemployment rate is kind of inching up, but we're still not yet in a major recession yet in Vegas. I mean, we're starting to see maybe the slowdown. The tourism is down, right? The tourism is down 8% year over year, according to some of this data here. Let's see. Compared to the same month in 2024, visitation dropped 7% in August 2025. So there's a slowdown in people going to Vegas, slowdown in hotel bookings. That's starting to show up in some of the economic readings. The unemployment rate is ticking up. If we look at the non-farm payroll report for Las Vegas, everyone, we can see we've now officially entered contraction in terms of year over year payrolls in Vegas. This is an important thing to understand. So if we look at the year over year employment growth, we're basically in contraction now. So it's not like a crash in employment, but we're actually negative year over year on job growth. But you can see there's a long way to go before we get to like what it was back in 2009, where jobs were down 10% year over year. And, hopefully that doesn't happen again. I don't think it will happen again. I don't think we're going to see a 13% unemployment rate in Las Vegas. But my whole point with this was that those big increases in unemployment is what translated to that 60% price decline. And there was a lot of mortgage defaults back then as well. The mortgage default rate in Vegas went to like 11 or 12%. So I don't think it's going to get that bad this time around. But you do have to say, if the economy does continue to slow in Las Vegas, layoffs increase, it's what is going to happen to the housing market? Because we're already seeing that slowdown without huge job losses, without a lot of mortgage defaults. So what is going to happen once those things start increasing, which is realistic to expect that they will start increasing? I'm actually going to just show you some data right now on the mortgages and the mortgage defaults, because I think it's important data for you guys to see. How many people are defaulting on their mortgage in Vegas right now? And how does that compare to previous years? This is data from Fannie Mae that I'm about to show you. If you're a home buyer or an investor or a seller, always good to know what the mortgage default rate is in your market, because that mortgage default rate could have a big impact on where home prices go in the future. So let's take a look. What is Vegas's housing market looking like right now in terms of the mortgage default rate? How does it compare to previous eras? So right now, this is looking at Florida. Let's change it to Las Vegas. This is data from Fannie Mae. So we have a couple different lines here that I want you all to pay attention to. The orange line is the amount of mortgages in 30 to 90-day delinquency. You can see there has been a sizable uptick in that in the last 2 years. So the mortgage delinquency rate in Vegas is now actually, I would call it, above pre-pandemic levels. So mortgage delinquencies are ticking up across the spectrum, 90 days, 30 to 90 days. Foreclosures are still really low. Only 0.2% of all mortgages in Vegas are in foreclosure. But I want to point you to what happened last time. 2006, we had a fairly low mortgage default rate, fairly low foreclosure rate. That all then skyrocketed very quickly. The foreclosure rate peaked at 10% of all mortgages. I don't think that that's going to happen again. We're not going to get to a 10% foreclosure rate in Vegas again. But could we get to like a 3% foreclosure rate or a 4% foreclosure rate if the economy tilts negative? That's a possibility. And if that happens, what's that going to do to home prices? Because again, we're seeing this slowdown. We're seeing this slowdown in Vegas's housing market with there being really no major increase in mortgage defaults yet. The sales are way down. Sales are down 30, 40%. The inventory is way up already. The inventory is way up, the sales are way down. We're starting to see values go down in different parts of Vegas's housing market. So I just wonder, like if those mortgage defaults were to go up in the next year, they've already started going up, would that cause more downward pressure on the market? Here we're looking zip code by zip code in Las Vegas on Reventure App. Reventure App is the program I developed to help you guys as home buyers and investors better understand the market, better understand where things are heading. You can, at the end of this video, download the Reventure mobile app and access this data for yourself, or you could go to www.reventure.app and access this data for yourself. But one metric I'm going to look at here is the percentage change in values since the middle of 2022. So over the last 3 years in Vegas, there's been some bifurcation. You could see values in the last 3 years are down slightly to the south in areas like Enterprise and Henderson. They're also down to the north and northwest in the last 3 years. So there's only been like a mini correction in the last 3 years. Other markets, though, are up the last 3 years, more towards central Las Vegas. Also out west, Summerlin South are up the last 3 years. Summerlin's an area, higher income. A lot of people from California moving to Summerlin and buying homes. Ultimately, we'll have to see, are the values still going to hold in a market like Summerlin into the future? I have my doubts. Because if we look at inventory, what's going on with inventory in Summerlin? Oh boy. Take a look at this. We went from 100 homes on the market a year ago to 232 homes on the market this year in Summerlin. 89138. Highest inventory in 10 years. So I know a lot of people are still probably thinking like Summerlin, oh yeah, it's where all the bougie people from California are buying. They might say that area is not going to go down. Well, folks, look at the inventory in Summerlin. It's through the roof. Let's look at the home sales. Home sales holding, kind of, they haven't gone down that much, but they're not keeping pace with the increase in inventory, which tells me this is a market that could decline. Let's get some requests, everyone. If you guys are in Vegas, what are you seeing? What are you hearing? What do you think about the market? Matt is saying that he works for Clark County and they told us tourism is down 12%. Yeah, maybe it is down more than the 7% that I was mentioning in the article before. I think there's different metrics that track different things. But either way you slice it, tourism in Vegas is down. That's likely going to have a negative impact on the economy. Someone else is saying this is not your typical recession. I'm guessing things will start to turn around beginning in the summer of 06. There will be turnaround more apparent by the end of 2026. Yeah, I mean, this is definitely not your typical recession. It's fair to say the housing market is in a major recession. Sales in Vegas and Nevada are down 30-40% from normal. That's a recession right there. The prices have largely held, though, because we haven't seen enough people forced to sell. We haven't seen enough mortgage defaults. We haven't seen enough job losses to cause inventory to go up. Blair is saying, I would love if you did Reno and Sparks, Nevada in the north. I might have some time to get into Reno in this video. Let's see. Matt has a request, 89128. He says they're not hiring at the county new positions this year, just filling existing jobs. I mean, that's in a lot of different places that's the case. Yeah, like hiring is just like way down. 89128. 89128. So this is kind of to the northwest of downtown Las Vegas. It says here Michael Way. Is that the name of the neighborhood? Michael Way. Well, let's take a look at the inventory. Inventory is 214 homes for sale. That's slightly above the long-term average. Inventory is slightly above the long-term average here in this zip code, Michael. Days on market, though, is way up. Days on market's 48 in August 2025 compared to a long-term average of 37. So when you see the days on market up, that's telling you it's a softer market. We could see here in the last year that this area is down 0.9% in the last year. In the last month, it's down 0.54%. So your zip code, Michael, it's already starting to drop. The drop is accelerating month over month. We here at Reventure think it's going to be minus 2.5% the next 12 months. Minus 2.5% the next 12 months. Here in 39, well, this is actually 39108. Were you requesting 39108 or 39128? I think it was 39128. 89128. I apologize. 89128. Just to the west. Minus 0.3% in the last month. We're forecasting minus 4.3% in the next year. And just, folks, on this graph, you could see how big that downturn was in Vegas in the last crash. I mean, folks, it was a bloodbath here in Las Vegas from 07 to 2012. Like I said, I don't think we're going to see a 60% decline in values again, but Vegas is about 17% overvalued. Could we see it get back to fairly valued? Could we see it go undervalued if the economic slowdown continues and there's more job losses? That's definitely possible. That's definitely possible. What else? What else are people saying? We got a zip code here. This looks like a California zip code or a West Coast zip code. I'm gonna stick here with Vegas in Nevada for right now. We got a request actually for Reno. We got a request for Reno from Blair. So let's zoom out here and look at some other areas in Nevada that you guys might be interested in. Actually, just look at the state level data for a second. So Nevada as a state is up 0.3% the last 12 months, basically flat. But Nevada as a state is, having all the same issues that Vegas is as a metro market. The home sale activity is just way down. Demand to buy in Nevada is way down. And I just want everyone to understand that, right? Because I know there's some people who are frustrated that prices haven't dropped by more, and I see them blame investors, I see them blame people from California. But folks, that's not really happening anymore. The investors have stopped buying. The people from California more or less have stopped moving in and buying. The demand is way down in Nevada. The issue was inventory, right? There wasn't enough supply. A year ago, there was 95 homes on the market below the long-term average. Now there's 13,200 homes on the market in Nevada. That's enough inventory to now start causing prices to drop. So it was a supply game. It was a supply situation that was keeping prices firm in Nevada. You could see here in Reno, which is probably the strangest shape of any metro I think I've ever seen. Is this Washoe? Is Washoe County? Washoe County? Very strange shape here. Values in Reno are up 0.7%. Reno's expensive, everyone. Typical values, $557,000. How do people afford that in Reno? Let's just quickly look. What can you buy in Reno right now? I don't know if you guys have ever seen the show Reno 911. I used to watch that show when I was a kid. I thought it was really funny. I don't know if that show is a good example of what it is like to be in Reno. But you can see here, what's Reno? Or this is in Sparks. 3-bed, 2-bath, ranch-style home, 1,300 square feet on the market for $455. That's $339 a foot. $339 a foot's a lot of money. Your payment would be $2,600 a month if you would buy it. I mean, that kitchen looks like kind of funky. Looks like it hasn't been updated in decades. It was last listed for rent at $2,200 a month. Now it's listed for sale at $455, 70% more than it sold for in 2018. Yeah, so Reno is still very expensive. I think it might have corrected a little bit from where it was 3 years ago. It's down 4.4% from 3 years ago. But yeah, I mean, I don't understand. I think there's definitely some overflow from California into Reno, Carson City, right? Definitely some Northern California people who kind of moved and bought up homes. But I think it's a similar story with the demand to buy in Reno. According to data from Redfin, in August 2025, there's 529 sales. Back in 2020, there was 861 sales. So if you're a realtor or mortgage broker in Reno or most of Nevada, you're definitely feeling this lower sales volume. You're feeling the fact that the buyer demand has dropped off. Our 12-month forecast for Reno is minus 2.6%. Let's see, everyone. What other areas are you looking to buy? Do you have any other requests? AJ is saying Vegas is way too high and no one can afford the homes. Yeah, I mean, that is true. The median income in Las Vegas is something around $78,000 a year or $80,000. It's gone up from where it was before the pandemic, but not as fast as the home values. And you combine that with 6.5% mortgage rates, and you get a situation where people can't afford it. It doesn't make financial sense. I think people look at buying a house in Vegas right now, and they're like, I can rent it. I can rent for 50% cheaper. I was talking to you guys earlier about that buy versus rent differential. It's a statistic we have on Reventure App, which is the program that I'm using in this application. In this video, you can see it's 50% more expensive to buy in Vegas than it is to rent. This is the buy versus rent differential. You can see this was not the case prior to the pandemic. From 2009 to 2021, It was actually cheaper to buy in Vegas. The purple line, it was cheaper to buy in Vegas for about 13 years, 12 to 13 years. Now it's way more expensive to buy. And this is the principal issue, right? As long as we see this cost to buy be way higher than the cost to rent, we're not going to see buyers return. But if we were to see the cost to buy go down, maybe prices drop 5% in the next year, mortgage rates drop to the low 5% range, that would be a moderate improvement in affordability. I don't know if that would actually be enough, though, to be a significant stimulant on demand if prices drop 5% and mortgage rates go to 5%. I think you need to see in Vegas for demand to really come back, you're going to need to see prices have to drop 15%, mortgage rates go down to 5. I think prices drop 15%, mortgage rates go to 5. You'll see the sales come back. You'll see the sales volume. You'll see the people from California coming in again. You'll see the investors buying again. But we're just not there yet. We're unfortunately not there yet for Vegas's housing market in terms of, seeing the return in demand. Matt says, I only got approved for a loan of $370,000 and the median home is $480,000. And that's the issue right there. People are going to the mortgage officer with their income statements, and the mortgage officer looks at their income statements and the down payment. And Matt, if you wouldn't mind sharing maybe just what the down payment was for that. And they're getting approved for a $370,000 loan. And the median home is $580,000 or $480,000. So it's just not enough. Interesting question from Coors Light 2025. Interesting screen name. Does anyone know if Vegas homeowners insurance rates have spiked over the past few years? The threat of wildfires seems to be less in Clark County. Let's try to answer that question for you. The recent ICE Mortgage Monitor, September 2025, had data on property insurance costs. Let's see if they talked about Vegas at all. So here's the year over year change in average insurance payment by market. Well, this is a 6-month increase. Average change in average insurance payment by market, plus 5.5%, 6-month change. That's a big increase over 6 months, plus 5.5%. So I think the homeowners insurance costs are going up. You can see it's not as much as California. California's plus 8, plus 9%. In terms of where Vegas ranks, it's a bit above average in terms of how much the insurance is going up. Cost per $1,000 of property insurance by market, you can see Vegas is $3.10 per $1,000 of coverage. So the way to think about that is if you have a structure that's worth $250,000, $3.10 would be, let's do that math one more time. $250,000 structure divided by 1,000, it's 250 times 3.2. That's saying $800 property insurance. I don't know if that's accurate. 800, does that sound right? How much is a property insurance policy if you buy a house in Vegas right now? Do you guys know? If you're an active buyer, definitely worth knowing. Insurance is going up in a lot of different areas, right? And that's one of the reasons why a lot of people also are like holding off from buying a house, because property taxes, insurance are going up. Let's see, what does Zillow say? What does Zillow say? So if you were to buy this 4-bed, 2-bath house in Vegas for $440,000, they just did a $10,000 price cut. How much is the insurance estimate, which is just an estimate? Property insurance, $1,700 a year is what their estimate is. But this is like another interesting house. So like this owner bought this house, and I don't know if they renovated it, but they bought this house for, wow, they've done a lot of different things here. They bought this house for $323,000 in 2021. And they're trying to sell it. They were trying to sell it for $470, and they've cut it to $440. So still trying to make like 30% from 2021 values. I don't know if they're going to be able to do that. They said they refreshed it. That's a very interesting living room. That wood paneling, I don't know if that was part of the refresh. But it looks like they might have done some work. So maybe they, are marking it up due to some of the work. But, $2,800 a month monthly payment. What kind of income do you need for that? 2,800 a month divided by 30% times 12. You need to make $114,000 to buy this house at that 30% payment threshold that you really don't want to exceed. If you're buying a house, you don't want to go more than 30% above your income, your gross income. Yeah, I think they might have to cut this one more. Just judging, the income statistics in the area, the inventory statistics. Let's just look at this zip code 89121. This is the type of analysis you guys can actually do on Reventure App. Look at a listing on Zillow or Redfin, take that zip code into Reventure App, and then see what's going on. 89121. Prices are down 0.3% in the last year. They're down 0.6% in the last month. And our 1-year price forecast is minus 5.3%. So if I was advising the seller, I would say, hey, you're in a market where there's definitely downward pressure. Values are already dropping. They're forecast to drop 5.3%. The inventory in your zip code is through the roof. 274 homes for sale. It's a 10-year record. The demand to buy in your zip code is at the lowest level in 13 years. Now's not the time to try to hold out. If you do need to sell your house in a zip code like this, cutting the price and coming to market more realistically is definitely the move if you do want to sell your house. We got a fellow upstate New Yorker here. Richie says, by the way, hello from a fellow upstate New Yorker. That is right. I am from upstate New York, basically across the country from Las Vegas. Let's see. Allison is saying at a household level, 114,000 sounds doable, but you also need to be able to scrape together a chunky down payment. That's true. I don't even know. At a household level is 114. I guess if you have dual incomes, each person makes 60 grand. You have 114,000. But like, if you look at the income statistics in Vegas, the median household income is 81,000. So that's household. The median household income is 81,000. So if you're trying to, price your house for $114,000 median income home buyer, you're probably going to struggle. And you can see this median income in Vegas broken out by zip code. This is data that you can access on Reventure App. If you're a home buyer investor who wants to research your area in Vegas, you can go to www.reventure.app and or download the Reventure mobile app. We also have a metric here, salary to afford a house. So we actually take what the mortgage payment is, and we show you how much you need to make to afford a house in Vegas. You need to make $108,000 household income to afford a house in Vegas right now. You can see that this salary to afford a house is well above the median income. And this is just like another marker of why it's likely that this market will continue to struggle. Because before the pandemic, the median income in Vegas was way above the salary you needed to afford a house. You could buy a house in Vegas in 2019 on a $48,000 median income. Crazy. You could make $48,000 in 2019 and you could afford to buy a house in Vegas. Now you have to make $108,000. There's just not enough people with that six-figure income in Clark County, which is why the demand to buy is so low. Matt has some interesting feedback. He's saying he's saying most jobs are service industry jobs in Vegas. Half the people seem to be sent home lately due to lack of work as tourism is down. Maybe as a result, the incomes might drop as well, right? I mean, if the people are being sent home because there's not enough work, maybe the incomes also might drop. Richie says, it's amazing how this channel has developed over the last few years. I started watching, I think, in late 2020 or 2021. The dedication to data analysis appreciated, of course. Thank you for that comment, Richie. I don't know if you guys know this. This is actually my second YouTube channel. So I have two YouTube channels. The main YouTube channel is Reventure Consulting. This YouTube channel is Reventure Housing Reports. In the end, it's kind of probably the same for you guys. I'm sure it pops up on your feed. But if we go here to Reventure Housing Reports, you can see this is basically like You can see the live stream right now, but this is where I do all the market deep dives. San Francisco, San Diego, Miami, Orlando. If you guys want me to cover your market, I might have already covered it actually in the last month or two. So make sure to check out those areas. Also, go to www.reventure.app and search your zip code if you want to educate yourself on the housing market data for your area. Today we looked at forecast, we looked at 1-month home price growth, 12-month home price growth, inventory, median income. We looked at everything in today's video. It's all available for you at www.reventure.app. Also, it's available on the app stores, everyone. Reventure is in the app stores for iOS and Android. I don't know if you knew that, but if you haven't downloaded our mobile app already, please do it now. The mobile app's a great thing to have in your back pocket. You can pull it out, track housing market data in your area. The premium plan on Reventure, everyone, is $49 a month to get access to the full suite of data. If you want to sign up for the annual pass, it's $33 a month, so you could track that data over the course of a year. And until next time, everyone, this is Nick from Reventure signing off. I'm going to have some more market deep dives here for you guys in the next couple weeks. Go to www.reventure.app to access the data for your